2024 tax season, top red flags that trigger an IRS audit. Welcome back, everyone. So very happy to have you back for another IRS update. Let's go ahead and get started with number one, not reporting all of your income. Unreported income is perhaps the easiest red flag to avoid, and by the same token, the easiest to overlook. Any institution that distributes an individual's income will report it to the IRS directly, and the more income sources you have, the greater the difficulty in keeping track. This is why you want to make sure you wait for all of your W-2s, your 1099s, your interest income information, because the IRS will have that information already, as well as old brokerage accounts are commonly overlooked as forms 1099 distributions from college savings accounts to pay tuition. The IRS will typically receive a copy of all of the tax forms that you receive as well, including distributed income. The IRS will match the reported items to a person's tax return. If they see something missing, they will automatically conduct at least a letter audit. Number two, breaking the rules on foreign accounts. The Foreign Account Tax Compliance Act has strict reporting requirements for foreign bank accounts. The law requires overseas banks to identify American asset holders and provide information to the IRS. Individuals are required to report foreign assets worth at least $50,000 on the new IRS form 8938. Number three, blurring the lines on business expenses. The IRS will give a close look to excessive business tax deductions. The agency uses occupational codes to measure typical amounts of travel by profession, and a tax return showing 20% or more above the norm might get a second look, so be careful. Also, take-home vehicles aren't considered strictly business, so a specific purpose should accompany any vehicle-related deduction. Generally speaking, the IRS can be strict about mixing business and personal expenses. Business meals can be allowable, but exceeding the occupational norm by a great amount invites an audit. Business meals oftentimes can be a blur line, so be sure to document what it is and what it is not in terms of personal expenses. Number four, earning more than $200,000. Last year, the IRS audited 1% of those earning less than $200,000 and almost 4% of those earning more than $200,000, according to IRS data. They raised the threshold to $1 million, and the percentage of audited tax returns increased to 12.5%. Higher incomes are likely to result in a more complex tax return and more likely to contain audit triggers, red flags. More importantly, the IRS wants their fair share of your dollars. All right, so make sure to be careful for filing your 2023 tax returns. Avoid these red flags so you can get your tax refund timely without any issues. Like, comment, share, and subscribe.